How is it going, traders? In this video, we are going to talk about the daily range narrative. In the previous two videos of the model, we talked about the phases of price delivery, the weekly profiles, and other things regarding the daily buys, the next day model. This video will be the continuation video of that model and part 3. In this video, we're going to talk about the daily range narrative, like when you have the buys already established. Now you have to go to the daily range and find entries and align the daily range logic with that. So first up, what do I mean by the daily range? The daily range is actually the price action within the single daily candle. Now the first thing comes in the daily range is the daily opening price. So the true open part of Forex is 17 EST, Eastern Standard Time, and for the futures it is 18 Eastern Standard Time, and this will not be affected by the daylight savings. So actually we use the daily opening price to determine the open high low close and open low high close of a specific daily candle. Like for a bullish day, after the daily opening, we would want to see the low of the day to be established below the daily open and then expansion to the upside. And for the bearish day, we want to see the high of the day to be established above the daily opening price and then expansion to the downside. Now the second thing in the daily range narrative is the daily profiles. The first one is the London reversal. I have a whole video dedicated to the daily profiles, so you can also check that out. So after the daily candle opens, the low or high of the day is typically formed during the London session between 2 a.m. to 5 a.m. EST. And the reversal is confirmed through the change in the state of delivery, which we'll talk about later in this video. So London reversal profile, the daily opening price, a protraction to the downside, and a reversal confirmed through the change in the state of delivery. You could also see that the wick of the candle is printed, and now the rest of the body in the New York session will expand to the upside. This is the example of the bearish London reversal. Price open up above the daily opening price and the high of the day inside the London session, and then expansion to the downside or the body of the candle. Now the second profile is the New York reversal. So when the London session consolidate or make an opposing run, the New York session will create the high or low of the day, which will be confirmed through the change in the state of delivery. Like for example, London consolidation or a protraction from the daily opening price, New York reversal, a closure above the series of down close candles, and an expansion to the upside. Same example for the bearish, London consolidation are making an opposing run, New York reversal, a closure below the series of up close candles, and an expansion to the downside. Now, the third thing is timing the reversals. With the help of the daily profiles, you will know which time the reversal will occur. But for the indices, we could time the reversal, not precisely, but somewhat. Like the London session high or low of the day is between 2 a.m. to 5 a.m. EST for the Forex, and for the indices, it is more likely occur at 3 a.m. because it is the London Stock Exchange open. So most of the time, the London reversal will occur around the 3 a.m. Or it could be a trigger to the expansion, and the reversal could also occur before that. Now the New York reversal most of the time occur around the volatility drivers. Like for example, 8:30 a.m. EST is the news release, so the New York reversal could occur right at the 8:30. Or if the 8:30 is doing the manipulation or consolidation, then the 9:30, the New York Stock Exchange open will do the reversal and then expansion. Now the 10 a.m., if we have significant news on the 10 a.m. Red folder news, and 8:30 and 9:30 are failed to manipulate, then the news could do the reversal and expansion. So this would be in this order, like 8:30 reversal, 9:30 expansion, or 9:30 reversal, 10 a.m. expansion. Now comes the intraday change in the state of delivery. Like for the weekly range, we are confirming the intra-week reversal on the 1 hour time frame with the help of the change in the state of delivery. Now same for the intraday change in the state of delivery. We will observe it on the M30, M15, or the 5-minute time frame. How to avoid the fake change in state of deliveries. Actually, when you are aligned with your bias, for example, my bias is bullish, then I would want to see a closure above the series of down close candles. Other than that, I will not look for the 60 to the downside or opposite to my bias. Now, sometime you will get the overnight change in the state of delivery, like the continuation order block days. Like when we are respecting the order block from the previous day and we are creating the low of the day inside that, then that would be your overnight change in the state of delivery. So these are the schematics of the change in the state of delivery. We open up, created the low of the day around 3 a.m., 8:30, 9:30, or 10 a.m. Then a closure above the series of down close candles, and that is our change in the state of delivery in the expansion to the upside. Now comes the entries. The first one is the positional entries and the intraday entries. On the positional entry, I will make a whole separate video, like on the 1 hour time frame for the swing trades, but we will discuss in this video. Positional entry on the 1 hour time frame. Entry condition is when the weekly range logic is paired and the daily range logic is also paired with it, and the candle 2 closure or the next day model is aligned. We will use the 1 hour time frame for the one shot one kill entry. So this would be the example. Like in this example, we created Tuesday low of the week, and then it would be a Wednesday. Then we could enter on the change in the state of delivery. For example, Monday consolidation, Tuesday reversal, a closure above the series of down close candle on the hourly chart. Then we could enter on the next candle, stop below the body's low. If the manipulation is with small candles, then we could also put our stop loss below the wick low. Or if the manipulation is too large, like a V shape, then we could also put our stop loss below the 50% of the change in the state of delivery. And also we could look for the continuation or block entries. Like for example, on Wednesday, we are having a down close candles, a closure above it into this fair value gap, which is an order block. I could enter on the next candle, my stop below this low. So this was the one shot one kill entry. Now comes the intraday entries. For the intraday entries, we need awareness of the news. We'll check the economic calendar, and if there is a high impact news like CPI, NFP, FOMC press conference, then we would avoid the day before. If there are medium impact news like core PCE, PPI, FOMC statement, then we would avoid the session before that. Now for the indices, if there is no news, we could wait for the New York Stock Exchange open, which is the 9:30 a.m. That would be your volatility driver. Now for the intraday entries, for example, volatility released. This is our news release, which is a manipulation at 30, then a closure above it. Then we could enter on the 9:30 because it would offer us an expansion because manipulation is already occurred. We will always look for the post-release entries. Now how to enter. So the initial entry will be the change in state of delivery entry. We would avoid the limit entries or the limit orders because in exaggerated expansion we would not get filled, and this will also trigger the fear of missing out or FOMO. The first is the low risk buy or the change in state of delivery entry. So the daily candle open up, then created the low of the day, a change in the state of delivery. Now we could enter on the next candle right after the 60, but we need that close. So this would be my entry. My stop below this week low of the change in state of delivery or the low of the day. And we could trade the expansion to the upside. Now comes the continuation order block entries. With the continuation order block, it means the order block forming after the change in state of delivery. So when the change in state of delivery is already established and we do not get entry right at the change in state of delivery, or it is a big manipulation, then we will look for the entries on the M15, M5 and the M3 time frame for the continuation. Like for example, we have the M15 chart change in state of delivery established and we miss that entry or the stop loss is too big, then we will drop down to the M5 or the M3 time frame. This is that M15 change in state of delivery and we will look for the continuation of block. Like for example, a closure above this down close candle, which is a propulsion block, an entry on the next candle, or another continuation entry, a closure above these down close candle into this fair value gap, and the next candle is my entry. And I am not using the limit entries because in exaggerated expansion we do not get filled most of the time. Now comes the using the open low high close and open high low close of the hourly candles. Like for example, most of the entries are occurring between the candle openings like 9 a.m, 10 a.m, or for the London session 2 a.m, 3 a.m, or 4 a.m. So you have to position yourself within the wick or start of the body of the hourly candle. This would be the example. Like if I'm entering around the 10 a.m, then the change in the state of delivery for the day is already established. Now the 10 a.m 4 hour or hourly candle has created its low. Now I would know that it will expand to the upside, so I could position myself right after the low on this order block, or I will look for continuation entries. Now this is the second example. We have the 1 hour candle on the right. We open up on the 9 a.m and then manipulated, took this sell stop and then a closure above this down close candle, which is an order block. I could enter on the next candle knowing that the low of the hourly candle is printed and now it will expand to the upside. These are the uses of the hourly candles. When you are entering around the new hourly candles or the 4 hour candle, you could take advantage of them for your entries and know when the body of the candle will be printed. Now in the examples, I will cover all of my model and I will combine all the parts of my model into one example. So the first thing is economic calendar awareness. So we will go to the economic calendar. On Monday, July 1st, we have a medium impact news. On Tuesday, medium impact. On Wednesday, we also have a medium impact news. On Thursday, we have a bank holiday. And on Friday, we have non-farm payroll. So I would trade Monday, Tuesday, Wednesday. I would avoid Thursday because it is a pre-NFP and also it is a bank holiday. So the only thing I will be cautious about is a session and day prior to the Friday, which is a non-farm payroll. So the second step is identifying the further price delivery. So we are expanding in one direction, expansion, retracement into expansion, into a retracement into another expansion. Now the first thing is identifying the further price delivery. So we are inside the consolidation range. In this case, I would want to see either side of the range to be manipulated in order to trade to the other side. And I will also check the ES chart on the way. So we haven't taken the consolidation range low yet. Going back into the NQ. So starting with the Monday, we are inside the consolidation range. So I would avoid the Monday's price action. On Monday, we do have a candle 2 closure. Going into the ES chart, we have manipulated the consolidation range low. So this low will be a protected low going into the week. I would trade away from this point. And also if I mark the weekly opening price, so if I mark the weekly opening price, we created the low of the week or the wick of the weekly candle, and now we will expand to the upside or the other side of a consolidation range. Now we do have the candle 2 closure and SMT divergence with ES and the weekly opening price. We have created the low of the weekly candle. Now the next step is adding the weekly profile to the next day model. So Monday low of the week, which will be a classic expansion or a classic bi-weekly profile. Monday low of the week, Tuesday, Wednesday, and Thursday expansion, and we have the consolidation range high as our target. So incorporating this day model, weekly opening price, and the weekly profile into the next day model. The next thing is the intra-week reversal. So for the intra-week reversal confirmation, we will go to the hourly chart. Here on the hourly chart, we do have a change in the state of delivery established, a closure above this down close candle on Monday. So this low will be a protected low. Now going into the week, we will expand to the upside, and this low will be a protected low to trade away from. Now with the intra-week reversal, you could also enter on positional entries. For example, a closure above this down close candle, I could enter on the next candle, a stop below the 50% of this change in the state of delivery. In this case, the change in the state of delivery is with a large manipulation. So if I am putting my stop here, this would be around 200 points. So I would put my stop loss here, and I could trade the weekly range expansion to the upside. And for the intraday entries, we could go to the daily range or the intermediate time frames. So the first thing going into the daily range is the daily opening price. The second thing is the daily profiles, and then the entry. And also going into the new day, using the next day model, my point of interest will be the equilibrium of the previous day's range. In this case, we have a large wick. So I will use the equilibrium of this wick as my point of interest to continue to the upside. I don't want to see price close below the 50% of this wick, and I would want to see a reversal in the upper quadrant of this wick. So this is the upper quadrant of this wick. I would want to see a reversal inside this, are respecting the 50% of the change in the state of delivery, and then expansion to the upside. Now the first thing in the daily range is marking out the daily opening price. Now I have marked the daily opening price. For this candle, I would want to see an open low high close candle or a bullish candle. Do we have a reversal established in the London session? No, we don't have a reversal established. So going into the New York session, I would want to see a reversal and an open low high close candle. So I would go to the M15 time frame. This is that upper quadrant of that wick. This is the daily opening price. We are protracting to the downside, and probably we are creating the wick of the daily candle. We have manipulated the sell stop, and we are in the upper quadrant, are respecting the 50% of this change in the state of delivery. So I want to see expansion from now. We protracted to the downside from the opening price, a New York reversal, a closure above the series of down close candle, and we do not have any relevant level left, so we will expand to the upside. So I could enter on the next candle, my stop below this low, which would be 58 points. So I could trim down my stop loss by marking the 50% of this order block, and I would put my stop loss slightly below the 50%, which will be 38 points, and I could target this high. And as you can see, on the 9:30 we expanded to the upside, and our profit target is achieved. Also, now for the continuation order block, if you have missed the initial change in state of delivery entry, you could also enter on the continuation order blocks. In this case, we have a down close candle into this fair value gap, a closure above it. Now I could enter on the next candle. In this case, the wick are too large, so I would put my stop loss below the bodies. And since we have expanded too much, so I would target just 2 hour. As you can see, this was the continuation entry and we have achieved our 2 hour. The Tuesday candle expanded to the upside and we will reach this consolidation range high, which will be our target. And keeping in mind, on Monday low of the week, we will want to see Tuesday, Wednesday, and Thursday expansion to the upside. Now going into the economic calendar. On Tuesday, we had 9:30 and 10 a.m. news. On Wednesday, we have low impact news, and Thursday would be a no trade day. So for the Wednesday candle, what would be my point of interest? I will use the 50% of the previous day's range as my point of interest. So I want to see an open, low, high close candle respecting the mean threshold of the previous day's candle. So going into the Wednesday's price action, so I want to see an open, low, high close candle respecting the upper quadrant of the previous day. In London session, we consolidated and we haven't created the low of the day yet. So the New York will likely do the reversal and expansion to the upside. Going into the New York session, we do have 8:30 news. So we will likely create the low of the day or reversal around the 8:30. Now right at 8:30, we have taken the sell side liquidity and we will likely expand to the upside. On 9:30, we close above the series of down close candle, which is a change in the state of delivery. And as you can see with the schematics from the daily opening price, we consolidated and then a manipulation created the wick of the daily candle, and now likely you will expand to the upside. So I could enter on the next candle my stop below the body's low, which is a 46-point stop. I'm okay with that. And I could target this relevant high. And as you can see on 10 a.m. we expanded to the upside and our profit target is achieved. I would avoid Thursday because it is a free NFP and a bank holiday. So skipping the Thursday's price action, I would go to the Friday. On Monday low of the week, we would want to see a TGIF or a return back into the range. Since we haven't taken the Wednesday high, Thursday was a consolidation and a bank holiday. We would want to see a Friday either reversal from the Wednesday high or a continuation to the upside from the previous day low. Keeping the price action to the NFP release on Earth. On the ES, we have taken the Thursday low, so that would be an SMT divergence with the ES. So on the days like that, when we do not have any narrative and we have SMT with the lows, so I could trade the Friday as a continuation to the upside without having the TGIF setup. Since we have an SMT divergence with ES, so the downside idea is invalidated, so I will look for the longs. So for the long side idea, we have respected the 50% of the NFP wick and we have closed above the series of down close candles, and we do have an SMT divergence with the ES, so I could play the continuation to the upside. If I'm entering this candle, my stop would be too wide, but on the days like NFP, I could tolerate that much of a stop loss. I would put my stop loss at these lows and I would target simply 2R. Since the expansion is too exaggerated, so I would give room to my stop loss. And as you can see, my 2R target is reached. This is it for this video. Sorry guys for not adding more examples because the video would be too lengthy. I would upload an FX replay backtesting session of this model. Thank you guys for watching. Make sure to subscribe to the channel and do like the video. And if you have any question, let me know in the comment section, or you could join my Discord. The link will be in the description.